Every month, millions of people watch their paychecks stretch a little less. Their savings shrink quietly. Nothing is stolen, no one breaks in, yet wealth moves, slowly, silently, from one pocket to another. This is inflation, and most of us think we understand it, but we don't. Imagine this. 10 years ago, you bought a simple basket of groceries for $100. Today, that same basket costs $140. You earned the same job. You didn't overspend. Nothing catastrophic happened. Yet you have 40% less purchasing power. And here's the kicker. It didn't vanish into thin air. It moved somewhere else, to someone else. But who and how? Right now, inflation headlines scream numbers like 6%, 7%, even double digits in some countries. Everyone panics, everyone reacts, but almost nobody asks the real question. Who benefits when your money buys less? And why does the system let this happen quietly, month after month? This matters more than ever, because the mechanisms that move wealth invisibly are accelerating. Interest rates, global debt, and government spending are all working together, and most people have no idea how. Let's start small. Inflation is a rise in prices, yes, but that's the surface. The hidden layer, it's about power. Your money today isn't just a number on paper, it's a claim on goods, services, labor. When prices rise faster than your income, your claim weakens. You're still holding the same number, but it buys less. And those extra dollars you pay for the same goods, they end up in someone else's hands. Corporations, investors, lenders, governments. Quietly, your wealth migrates upward. Here's how it works. Imagine a company with $1 million in cash reserves. Prices rise 10% this year. That same million now loses value if left in the bank, but the company doesn't lose out. They own real assets, factories, commodities, contracts that rise with inflation. Meanwhile, you, holding cash in a savings account, watch your claim erode. Every dollar you keep stationary is slowly siphoned away. It's almost like a tax, but invisible. No politicians vote on it, no receipts, just numbers moving silently in the background. Let's put numbers to it. Say you earn $50,000 a year. Inflation averages 5% for a decade. By the end, that $50,000 has the purchasing power of roughly $30,000. That's a 40% loss. Yet corporations and governments are collecting assets, raising prices, and expanding debt in ways that actually gain from that 5% rise. So while your living room shrinks, the financial system grows. You didn't lose money, you lost leverage, and that's much worse. Financial pundits love to talk about real wages adjusting, but look closer. Wages might rise 3%, inflation 5%. The headline sounds okay, but the reality? You can buy less, owe more, and slowly slip down the wealth ladder. The irony, everyone knows inflation exists. Nobody talks about its silent redistribution. That's the invisible tax. And no one questions it because it feels normal, everyday, natural. It isn't. Step back. Global inflation isn't just about your groceries. It's about countries, sovereigns, debt markets. When a country owes trillions, inflation quietly erodes the real value of that debt. Creditors might get paid in nominal terms, but the real burden shifts. And the powerful, those controlling capital, real assets, commodities, they gain. It's a system designed to move wealth without violence, without headlines, without anger. Almost like magic, but with math, not tricks. So next time you feel your money losing power, remember this. Nothing is missing. Your wealth isn't stolen. It's relocated, moved quietly, efficiently, with a purpose you rarely see. And the deeper question remains. In a system built to quietly move wealth, how do you protect yourself when even doing nothing is already a decision? Because the system doesn't just shift prices, it shifts your life. And no one ever tells you where it goes.